Welcome. We will begin shortly. I'm Rashana Levin with Keller Williams Realty. Today's webinar is on qualifying for a mortgage. So today's agenda, I'll talk a little bit about me, talk about income, assets, liabilities, and how to look at what you currently have to analyze what the approval amount will be. It's not etched in stone. Of course, the lender has to look at it, but that'll kind of give you a gauge of where you are before you start applying for a mortgage. So I've been a realtor for over 15 years. I'm with Keller Williams Realty. I'm licensed in Virginia, Maryland, and DC. I am a military relocation professional and a notary public in Virginia. So the first thing that you have to think about is your income, your job stability. Have you been at the job for at least 2 years, and do you have 2 years of tax returns? So think of everything in twos when it comes to getting qualified for a mortgage. So you need 2 years of tax returns, 2 months of your pay stubs, and all those things. So also your qualifying income, if it is a significant difference, they're going to average the two together and come up with a number as well. So assets, that's the next thing. So how are you going to finance your down payment and closing costs? What's your affordability? And what do you have? What do your bank accounts balances look like? Make sure that there is no negative items in there, like you haven't overdrawn your accounts. What does your savings account balance look like? Do you even have a savings? Are you getting the money from your retirement account? So what is your basically your payment history, and also how do you manage money? Are you considering getting a down payment assistance program? Are you going to get the money from your retirement account to finance the home? Are you going to have a home sale? So liabilities. So these are things that are going out. So auto loans, so that's the car payment, credit cards, personal loans, and student loans. So important thing to note about student loans. I want you to ask your lender how your student loan payments will affect you in your qualifying for a home. Because if you're on a special assistance program that's income-based, many times, probably 90% of the time, they're going to use your total amount that you owe, divide that, or multiply that by 1%, and that is going to be considered the monthly payment that they're going to use, even if you're on an income base, which could potentially place you into a non-qualifying status for a home based on your sales price and your other debts. So that's important. So for example, say for instance, if you owed $100,000 in student loans and you're on a payment plan of $25 a month, and you have credit cards, you have another personal loan, and you have a car payment, and 1% of 100,000 is 1,000. So that's going to put you over the amount, and then now you don't qualify for a house. So very important to know that. So current housing, are you renting? Is there a payment shock? And what do I mean by payment shock? Payment shock is, say for instance, if you're saving money, you're living at home, or you're living somewhere else, doesn't really matter whether you're living at home or not, but the payment is a significant difference in the amount that you actually want to use for a mortgage. So say for instance, if you're spending $1,000 a month in rent, but you want your mortgage payment, you feel like you can afford $2,000 a month. That is a significant difference that they can't prove that you can actually you're stable enough to actually pay that per month, because they haven't seen it. So make sure you have that amount saved to actually show that you can actually pay that amount on a consistent basis. It might be an issue. So This is just to assist you. Might not be an issue, but that's something that you have to consider. And if you own a home and you're thinking about not selling the home, can you afford the home you have with it out being rented? And if it's rented, they're only going to take a percentage of that. So say with your mortgage payment, the rental, the tenant that you get will take care of the mortgage, but they're only going to use a portion of that. You still have to be able to basically pay both those payments in the event the tenant cannot pay. So that's important for you to know. So let's look at this example. So let's look to the right. So this example of Sarah Smith. So she's buying a home. She wants to get a conventional loan, and her yearly salary is $85,000. So we divide that by 12 to get her monthly salary. So her monthly salary is $7,083.33. And so now we need to find out her qualifying amount. So since she's getting conventional loan, the current ratio, front-end ratio is what they call it, and that's for housing. So the housing amount cannot exceed this amount, but I'll go into detail on that in a few minutes. So based on her monthly salary, the mortgage payment cannot exceed $1,983.33. So now we have to calculate what's called the back-end ratio. So what you would do is you would take your monthly salary and multiply that by the 36%, and that's what that amount is. And we have to we have to subtract the monthly expense by the housing expense to come up with the amount that the debts cannot exceed. So the debts cannot exceed for Sarah is $566.66. But let's look to the left. Her actual monthly debt with her car, student loan, and credit card is $750. So now we have to take the $25.49.99 and multiply that by her current debt, and now she only qualifies for $1,799.99. So in this example, if this was you, to be able to afford more, you'll have to either pay off some debt or you'll have to put more money down as a down payment, so your monthly payment cannot exceed that. So if the amount they say with the type of loan program can exceed the $1,799. So that's going to include your principal, interest, taxes, insurance. If there was PMI on the loan, that's included in that also. Your HOA, and condo, if there's a condo. So all of that combined has to be underneath the $1,799.99. So if you would like to get your own personalized debt to income income calculator, send me an email at rashawn11@kw.com and I'll be happy to send it to you. And for more questions about qualifying for a mortgage, if you need recommendations to a local lender in Virginia, Maryland, and DC, I'll be happy to assist you. You can email me or you can give me a call at 240-284-4114. Thank you so much for watching.